Hello, good people. We have a special guest with us today. We have Bekxy Kuriakose, who is the head of fixed income principal asset management company. Bekxy, welcome.
Thanks, Shweta.
Bekxy has almost 2 decades of experience in this industry. Back when there were hardly any women in this industry, right? So, Bekxy, tell me what brought you here and what keeps you here?
So actually my entry into the mutual fund industry was a happy accident is how I can call it. I was hired from campus. I did my PGDM from IIM Bangalore. So I was hired by my first company, which is SBI Mutual Fund. So my career in the mutual fund was not pre-decided. I did want to do have a career in the financial services industry, and I entered my first company, and that's how I started my career.
Okay, so how did fixed income come about? Because equity is usually the more glamorous part, and debt is sort of low profile till maybe 2 years ago, which has now come into limelight, which has attracted a lot of attention, a lot of investments even. Some brickbats also, and I see you getting quoted on various things in the debt industry. So tell me, when it comes to debt, is it exciting? Is it adventurous? Is it scary? Or is it boring?
So you're right, Shweta. Actually, I myself never considered debt to be exciting, and when I joined the mutual fund industry, I actually wanted to be placed in equity. And my hiring manager, I did request them if I can be placed in equity. So they said, we don't have an opening in equity. The opening is for a fixed income dealer. Why don't you join the fixed income department, see how you like it, and maybe after some months we can see whether you want to stick to it or you want to move to it. And that's how I joined the debt or the fixed income department. And slowly as I got into the job, I got involved into the nitty-gritty. I realized actually that it perfectly suits my profile, because I have a background in economics honors, and in economics, we study about money supply, monetary policy, what the RBI does, GDP, how that is calculated, inflation. And all those concepts we use in the debt markets.
Yeah.
So, I was actually, in a function where my educational background was a perfect fit. And, debt funds or debt markets and the kind of returns you generate, they're supposed to be more safer for more conservative investors, and you don't have the kind of volatility that you see in equity. That was something I was comfortable with, the range of volatility or the kind of risk which is there when you take decisions. So actually I felt, I eventually took to it like a fish to water, and I was happy, being on the debt side, and then my career just, progressed and took off from there.
Yeah, so you've seen the whole evolution of debt funds actually. Because credit risk funds came about 10 years ago, not more than a decade ago.
Yes.
Before that, we could see really high returns in debt funds. So you've seen a whole evolution. So tell me, what excites you more about the sort of credit risk that you're seeing, the duration side? What are you focused on?
So you're right, Shweta, the debt markets in India have really undergone a huge revolution. When I started my career, it was, the gilt market was physical.
Yes.
And we used to have physical certificates. Our back office guy would run to the RBI office with the documents. And from there, now we have come to a position where we have the clearing corporation, and most of the trading in gilts is electronic, everything is demat. So that's been a huge revolution on the market side structurally. And on the mutual fund side also, like you mentioned, we have had a lot of new categories of debt funds coming out over the years, and a lot of regulatory changes.
Yes.
Last year we had a landmark regulatory reform in terms of the categorization, SEBI categorization, where each category has been defined very clearly, and every mutual fund can have only one scheme in that category. So yes, a lot of changes. And what I have seen over 20 years is, you have had popular categories of debt funds come and
there are
go.
Phases, I think.
There are phases, exactly.
Trending, this is trending now, yeah.
Yes, so credit risk funds were the flavor for a long time, and now we see the flavor is corporate bond funds, banking and PSU funds, and so on and so forth. So these cycles keep happening.
So is that what excites you about your job as well?
I think the main passion that I have for the markets is that every day in the market is a new day, something different happens. It's never the same as yesterday. And added to it, you have so much regulatory changes happening, a lot of new developments happening. Today it is the trade tensions, maybe, some months back it was something else which was, talk of the town. So it's like you have to keeping up. You have to keep up with the markets, and every day brings in new challenges.
Okay, so with new challenges, I'm going to ask you on the personal side. So let's see how you faced this challenge now. So what were your sort of money values when you were growing up?
So when we were growing up, of course, my parents were a typical middle class family, and money was tight. So whatever we were given to spend, we had to spend it carefully. And I think, so I can say that, the importance of money has been built in from an early age. So much so that my own sister, she calls me a miser because I don't spend freely.
Did you always sort of save your pocket money and not spend? Were you that kid?
Yes, I was that kid.
Okay.
So the spending, so the saving habit has been there, I can say, in my genes, and saving comes quite naturally to me. So that is probably, I can say, the most important money habit which has been there for me from childhood.
And when you started investing, did you sort of dabble in equity first, or because you were into debt, did you start off with investing in debt first? Because we do remember times when debt would give double-digit returns. Even equity was difficult. I mean, it was difficult for equity to sort of keep up. But so did you start investing in debt or equity first?
Good question. So, yes, there was a time, especially early on my career, and I have seen those double-digit returns given by debt funds. Ironically enough, though, I started my investing journey with equity funds. And that too with the tax saving options.
Okay.
Because early on your career, the tax saving options are an important part of when you're trying to save on the tax thing. And I think I started my first investment with an ELSS scheme.
Okay.
Which was a tax saving scheme. But over the years, what I have found is that I do have a behavioral bias, because I'm in debt funds and I have invested a significant chunk of my money into debt funds and less into equity funds. And now that I look back, I feel I could have invested much more into equities perhaps.
Right. So how often do you review your portfolio?
Almost daily basis.
Okay, okay. Isn't that something we tell advisors, we tell investors not to do?
So for me, because I'm in the markets and I have a very simple way to monitor my investments, it's online, my investments are all together. So it's actually easy for me to do that. And I think it's a function of how easy it's for you to monitor your portfolio. And all my savings are mostly into mutual funds. So it's actually easy for me to monitor them. But yes, that does not mean that I do changes to my portfolio very frequently.
I think that's the key part that we should give our investors, that Bekxy does see her portfolio regularly but not make changes regularly. So be like Bekxy, don't make changes regularly.
Yeah.
The other thing, I think what you also touched upon is that investors start off, or you started off with ELSS. I think that's something that we tell a lot of new investors to start off with, because it makes sure that 3-year lock-in is there. So you become a little accustomed to long-term investing rather than short-term. So is that, you also talk to a lot of women, right? So is that something that you advise women as well, young women who are starting to invest, that they start off with like an ELSS, or what's the advice that you give them?
So I think the nature of advice that I give to women has itself changed over the years. As you know, my own personal experience of investing and seeing the way, you know, the whole financial investing landscape has changed.
Yeah.
And today when any woman approaches me, I think first thing I tell them is to take a 360-degree look at financial planning and not to consider any scheme or fund in isolation. So they need to first get the macro picture in place. And what I mean by 360-degree financial planning is you need to list down your goals. So you need to do your goal planning. You need to do your budgeting of your cash flows. So your income, whether you're getting regular income, irregular income, you know, what's the cash flow, which are you getting? What are your expenses? And then how much is left for saving, and also based on your goals and goal planning, how much you need to save. Are you saving adequately or not?
Right.
And then comes the third step, where it is, you know, deciding the products, the investment products. And that again depends on the asset allocation, how much to debt, how much to equity. You know, women also invest in gold.
Yes, I was going to ask you that. Yes.
Then real estate. So you need to get your asset allocation picture and then select the investment products. And along with that, of course, also do the tax planning part, which is where ELSS comes. You know, so but you need to take a 360-degree look and do your financial planning, keeping everything in mind.
But
so your tax-saving investments would be a part of it.
Right. But do you see women more biased towards any particular type of asset or type of product that you talk to?
We don't have too much of data, because it's only in the last you know, some years that women are now actively started investing into markets. And I know women who actively even trade directly in the stock market. Then there are women who believe more into real estate, or who have a significant amount into gold and jewelry. And there are women who put a lot of money into bank FDs, or they are conservative and they believe in protecting their money, and they don't want to get into market linked products. So we have, you know, women across the spectrum with different investing you know,
styles and preferences. Yes. Yeah, but one of the things that your advice would be is just make sure that your goals are first articulated, and then
exactly. So the goal planning is very important. That's where you start with. So whether you're a woman in your 20s or you're in your 30s or 40s, so you would have different kind of goals. Somebody in the 20s would maybe want to buy a house, or maybe have other big ticket purchases, you know, like a car, or you know, even planning a vacation travel, foreign travel. Someone in their 30s may be looking to start a family, and therefore you have to start thinking about the children's education. You know, that would be your goals. And then of course, for everyone, whether you're in 20s, 30s, 40s, you have to think of your retirement, when you stop working, when your income stops flowing, and you should have a good enough kitty to take care of yourself. So these are some of the broad goals, and then people can have other different goals as well. So yes, the goal planning is absolutely important as a first step.
Do you think it's more important for women to plan their retirement than men?
So for women, what I feel is they need to be financially independent, because mostly men are, you know, most men are working, whereas women, they may be working, or if they were working earlier, they've taken a break because of children and they've become homemakers. So I would think that the first you know, step or priority for a woman is becoming financially independent, irrespective whether she's a homemaker or whether she's working. And you know, getting involved in the money decisions of the household.
Not just the expenses side, but the investment side as well.
Yes, absolutely.
one of the reasons that I think women don't take part in the investment decisions is sometimes they hesitate, thinking that this is going to be one more a fight item or a discussion item that I don't want to get in. Is there any hack, or is there something that you would advise women on how they can have, or how can they start these money conversations?
I think perhaps the dinner table is a good place to begin.
Okay.
So if the family sits around the dinner table, that's a time when you're generally relaxed and you've come from your work day or finished the task. So that's probably a good place to start a discussion on finances, or whatever works for you as a couple. But that discussion is important. It could be on a weekend when both of you are relaxed. To start on that discussion, and when you have time to review or talk about it or learn about it more. But the conversation has to be started somewhere.
So I love the fact that you said dinner table conversation, because, and miser, of course, when you said in the beginning, because I come from a Marwari family, and for us money is dinner table conversation. It's something that you get up in the morning and start talking about. We have no qualms about talking about money, and we are spoken to or called as misers for some reason. I don't understand. But yes, so I think that needs to come. At IBU Money, we do believe that it should be a conversation that you can start. In fact, we have something called a money date that we talk to partners about, saying, talk to your partner about money. This Valentine's Day, use that as an excuse, whatever day you start talking about money. So a money date is something that we are talking about. So I think that's a great time to start discussing, and it's not something that we should be scared about or hesitant about talking. I think that's a part that we should take and initiate some of these conversations, not just expenses but investment side as well. And I think they have a great example looking at you on the debt side as well. Something else that I want to talk about is when you see women entering this industry, is there, give me 2 or 3 things that you want women who aspire to be in this industry. What lessons would you give them, or what guidance would you give them?
So I see a lot of women entering the financial services industry. So where you have banking, mutual funds, insurance, I'm talking about all of them. But what is of concern to me is that the women keep dropping off from the workplace. So while we have a lot of women in the junior levels or entry levels, we see successively lesser and lesser women at the middle management or top management level. And that's where the real concern is. And for me, the mantra I can give to a woman who's entering the financial services is just stick on. It is very hard because women still have to do the majority of the household work, and they have the burden of childbirth and all the related issues around it, including taking a break if they have a family. And while we there's much more awareness even among the men of sharing household chores, but still a lot of it, the load falls on women. So obviously it's much harder for a woman to stick to the workforce with all these issues than for a man. But my advice is just stick on, because there is nothing else women have to do special. They are as good as men at the work. And if you just stick on, you will reap the fruits of that hard work, and you will eventually rise, come to middle management and top management. So
when you spoke about childbirth, I think I just have one discussion that I keep having with my girlfriends. When we talk about Indian mothers, every mother is a single parent in India because you become the primary caretaker to such a large extent that it becomes difficult for you to take on any other role. So I think sticking on becomes so much harder when you don't have a support system. But I think if you do, then definitely there's, I think, no lack of opportunities at the top. I think you're right when you're saying you don't have to do anything special. Just be there and just do, you're equally good. I think that's something that we need to keep telling women, that you're equally good. You don't have to be that extra. But we do see women doing that much more to make sure that they're at the workplace. So, okay, quick rapid fire round now, Bekxy. Are you ready?
I'm not sure. Let's see.
Okay, maybe this will calm you down. You win the hamper irrespective of what you do or how well you do.
Okay, great.
Okay, so here we go. In one word, describe your relationship with money.
Love it.
Okay, your next big buy.
Planning the next wildlife destination, since I'm a
Okay.
wildlife lover.
Okay, fantastic. Where would that be? Do you know it yet?
Not yet.
Okay, cool. Your pet peeve when it comes to money.
That my husband doesn't participate enough in our
Okay.
finances.
Okay,
Planning our
that's the other
finances.
way around that
Yes.
you're seeing here. Okay, cool. Any fear when it comes to money?
Fear is that I'll stop earning before I wish to stop, and then I'll have to figure out how to meet my money goals.
Okay, I think that's a fear each one of us have.
Yes.
Thank you so much, Bekxy. It was lovely talking to you.
Thanks, Shweta, for inviting me, and I hope your viewers will benefit from our session today.
I'm sure they will. Thank you. Do follow us on Facebook, Twitter, and not just like but share these videos.